Number 1. Did you know? Brokered CDs, through a brokerage firm. One of the easiest way to diversify and stay under the FDIC limit is to purchase what are known as brokerage CDs. Brokerage firms offer the same CDs as you would get it. You walked into 20 different banks and opened an account at each one for $250K. This is a little known fact. Yet, at most brokerages, inside one single account, they are able to purchase FDIC insured CDs from banks across the country. And best of all, you only need one single account to own all 20 CDs instead of walking into 20 different banks and opening 20 different CDs. Number 2. Treasury bonds. Considered the safest and most liquid asset in the world, United States Treasuries are finally back in the game. With interest rates hitting record lows in the past few years, the Fed has now reversed course. It is not difficult to find over 5% in a short-term treasury. And since the full amount is backed by the full faith and credit of the United States, $5 million in a 5% T-bill would pay you a cool $250,000 per year in interest. Finally, number 3. Brokerage money market or money market mutual fund. Although the rates can vary, these holdings will offer short-term liquidity with decent yields overall. Many brokerage firms use a waterfall program. So even if all your money is in one account and all in cash, the brokers usually have agreements with multiple banks to catch the excess amounts of $250K. So one firm may have agreements with hundreds of national banks. Number 4. Fixed annuities. Similar to a bank CD, a fixed annuity will offer you a fixed, guaranteed rate of return over a specified period. For example, 5% annual return for 3 years. The primary difference between these and CDs is that they are backed directly by an insurance company, instead of a bank. Make sure to do your homework before investing in any one insurer. Number 5. Multiple accounts and institutions. Since the FDIC covers each account at a single institution, consider opening multiple accounts. The limit applies to each account, per depositor. So a husband and wife could insure $1 million at any bank by opening multiple accounts. Each spouse would own a single registration account for $250K, as well as a joint account for $500K. This would fully insure $1 million per bank. So if you don't have a brokerage account, using only 5 banks would solve this problem easily. Like and subscribe so you don't miss future tricks of the trade. Our goal is to show you what we know behind the scenes, so you can win at finance.